Hey guys, what's up? Welcome to a brand new video. Today we're going to be talking about order blocks, how I use them, and how I've made a strategy around them for optimal use. Let's get into the video. Okay, so first of all, I want to tell you what an order block is. An order block refers to a zone, to a large order bought or sold by institutional or very large traders. This is often indicated on the charts with a zone, so you will see a large volume, large momentum, and big candles coming out of that order block. That's when you know you have a valid order block. So this will be the place where your optimal trade entry will form. If the banks, if the institution, if large traders are buying or selling at these points in the markets, you want to be selling or buying at the same place. Because this way you know you will have the most momentum behind you and you will have the safest trade possible. So how can we see these order blocks? Let's get into the charts. As you can see, I have made a dedicated recording setup, so you can still see the nice background behind me and you can see what I'm trading. As you can see, this is just a trade that I was watching because I saw this happening yesterday. As you guys know, I'm not trading anymore this year, but I'm still live testing, I'm still back testing, I'm still live testing, I'm still live trading, but only not with real capital. Okay, how can you see an order block in the markets and how can we find them? Let's get into it. What I always want to do and what I always want you guys to do is to get to the daily. I'll remove everything real quick. So let's go to the daily. So we go to the daily first, and I want you guys to go to the daily first with me. Okay, how can we see an order block? How do we indicate that this is a valid order block? And how do we find them in the market? So as I already told you, there has to be large volume coming out of that zone. So if we go to the daily right here, I notice this immediately. I notice this. So an order block is a zone where price comes to and reacts to. So you will see a reaction to that zone, and that zone is right here. And I'll take the bodies of these two candles. Why is this? An order block always indicates itself by a candle in the opposite move of the trend, and immediately after that candle there follows a big collapse like this. The same is around here: candle, big collapse, candle, big collapse, candles, big collapse, candle, big collapse, candle, big collapse, candle, big collapse. You get the point. So I always mark them on the daily right at the bodies. So right here, the body of candle 1 and the top of the body from candle 2. Bam. So this is the order block zone. As you can see, this is a zone, and after this zone we got a large momentum to the downside. And guys, remember that this is a daily time frame, so you guys must understand the higher the time frame, the more valid your trade is, and the more valid your idea is, the more stronger it is. As you can see right here, we come into the zone. We come into the zone and we collapse right after that. And I don't want you guys to enter immediately when it taps this zone. I will explain in a bit how you can manage this order block, because I don't want you to trade order block solely on itself. I want you to integrate it in your strategy and to fix it up a bit, make it a bit more prettier, make it a bit more accurate, and make it a bit more safe for your trades to enter on these order block zones. But I will tell you how I do that in a second. I will give you some more examples first. I went to the 4 hour real quick on this particular example, and as you can see, what happened here is we touched this order block, we got huge momentum up to the upside, only to take out liquidity that was laying around here. Liquidity, if you guys don't know, is people see this as support and resistance, and in a way this is support and resistance. So this is your resistance. As you can see, it goes up till here, and this is your support zone. Bam. So support, resistance. So what do? People sell at resistance and buy at support. Price comes at support, it rushes up, and immediately at resistance it rushes back down. It takes out all these orders that were around here. All these orders, it takes them out, then price comes back up to take out this liquidity that is around here. These stops all been taken out by this one. And that collapses immediately after that. You must understand that the market needs liquidity. It needs to take out stops in order to make big moves. So that's exactly what it does. Let's go back to the daily real quick and search some better examples actually than this one. Okay, so we have the next order block right here. Bam. Also a really nice zone to enter from. Then we have an order block right here. Again, really nice zone to enter from. We have an order block right here. Price did not come to this level. Let's give you some examples from the last few days. Order block right here. As you can see, price comes into this level and it collapses immediately. Let's dive a bit deeper into this right now and show you how to trade these. Because I'm telling you, order block right here, right here, right here. You can see that by yourself, but maybe you don't specifically know how to trade them. So you got down to a lower time frame. When you are at these zones, you go down to the 1 hour, and this is the 1 hour in this zone at this particular moment. So what can we see? Price got tapped right here, it rejected it immediately, price came back up a second time to create a lower high, then it rejected the level massively. So how could we trade this? Let's go down to the 15-minute maybe. What I want you guys to do is to go to the 15-minute or the 5-minute and search for a fair value gap. If you don't know what a fair value gap is, I made a video about this, but this is a concept from the trader ICT, the inner circle trader. And the fair value gap is basically an imbalanced candle. So a candle that price is not filled yet. For example, this candle is a fair value gap because this candle has not been filled and price typically comes down to this price and rejects to it. It needs to fill this price. As you can see, price did came back to this price to fill this candle, and then it rejected and went higher back again. But this is not the fair value gap that I want you guys to look for. We found an order block right here on the daily, and it was an order block to go short. So we will be looking for short opportunities. We will be looking for a fair value gap in this market. This is a fair value gap right off the bat. This is a fair value gap. This is a fair value gap. This is a fair value gap. And this is a fair value gap. All these candles leave fair value gaps behind them. If you want the best possible entry that you can get, you take the highest fair value gap possible, and that is right here. As you can see, more precise than this entry you are not going to get. You put your stop loss above the high around here. You put your take profit at these lows right here, and you have a 5-hour trade. We were going short, so theoretically you could aim for a break of structure, and a break of structure would be on a higher time frame as we are going short on the daily. So a break of structure would be here. This would be a break of structure. If we break these lows, we have a market structure shift and we go lower after this, most possibly. You can hold the trade, you can hold the trade forever, of course, and that's not the point. You want to get out of this trade as soon as possible, so I would recommend putting it at that first TP that I told you. So this will be your best entry. Then you can also enter here, you can also enter here, you can also enter here, and you can also enter possibly here. But keep in mind your stop loss needs to be above these highs. So do you want to be in a 60 pip stop loss trade? And if you're a swing trader, you definitely can, and you aim for these bigger targets that I told you. But if you're a day trader, you want to search the best possible entry that you can find, and that will be this one around here. If you want to play more safe and you have the patience for it, you wait for that break of structure. The break of structure was around here, as we said. Then we search for that fair value gap entry. This is the biggest fair value gap that you can see on the charts. So your fair value gap entry would be here, or even if you have that much patience, your fair value gap entry could be here. Then I want to discuss another thing. You can also take your order blocks on the 5-minute, the 15-minute, the 1 hour, the 4 hour. It doesn't really matter. As I said, the bigger the time frame, the higher the time frame, the more accurate it is and the more reliable it is. But you can still use these order blocks on lower time frames for extra confirmation. So as an example right here, you have your order block that is here. Price came down to this level and it reacted immediately after this with a huge displacement. So this is your order block. As you can see, price came down to this order block and reacted again immediately after this. So how can we trade this? Let's check first if everything is in order. We have an order block with displacement from it. This order block is under liquidity. That is also a key factor if you're trading on the lower time frames, I would say. If you're searching these order blocks on the lower time frame, make sure these order blocks are under liquidity. These order blocks are above liquidity. It depends on which direction you're trading, of course. But as you can see, liquidity is right here. So as I explained, market wants to take these out. It did right here. You have this order block right here. It's reacted off this, came back to this order block, and it was gone. So how could we trade this the most optimal in my opinion? So technically, if you look closely, this is a swing high. It has a lower wake to the left, it has a lower wake to the right. Slightly, really slightly. But I count this as a break of structure. This combined with liquidity taken out right here, having this big move to the upside right here, this is enough for me to enter. This was unfortunate enough not on the time slot that I enter, but let's say hypothetically it was. Then we search for that fair value gap. The only fair value gap that we can find right here is this one. By the way, I also want that fair value gap to be in a discount. So I want that fair value gap to be under the 50% of the displacement move. So the only fair value gap underneath the 50% of the displacement move is this one right here. I'll mark it with fair value gap bam, fair value gap. So this is your entry. Then to be even more precise, you want it to be on a round level if you can. A round level in terms of 5 pips, but you can't in this case because the fair value gap is only 2 pips big. So you put your entry right there. You put your stop loss underneath the swing low. You put your take profit where liquidity is currently laying, that is right here, and you have a 4.3 hour trade. Really simple, using all the blocks and refining it with a fair value gap entry. Guys, this is basically how I trade. I'm not always searching for all the blocks, but I do like it to refine my entries, to refine my trades, to make my risk to reward better and to make my trades more safe. All the blocks are actually really simple. I think they get overcomplicated a lot on the internet, but it is just really simple if you think about it, and it is just really logical. Where would you place your trades if you're putting $100 million on the line, basically? Where would you do that? If you place $1 billion on the line, you would place it on the best and safest place possible. And institutional traders and banks and everything, they don't trade 5-minute time frames, of course. They trade the dailies, they trade the weeklies maybe. So yes, they would possibly put their orders around here. Now, of course, this does not always happen. As you can see, this is a daily, and sometimes you go weeks without hitting a daily order block. Or you need to have the patience, or you need to risk less on every order trade that is not in that zone. Let's say price gets in the zone and it gives you every signal that you need to sell or every signal that you need to buy. Risk more on this. Risk 2% on this, risk 1.5% on this, and risk on your other normal regular trades just 1%. You can still use the order block on the 1 hour, on the 30 minute, on the 50 minutes, but no, these one will be less reliable than the daily order blocks. Guys, if you enjoyed this video, don't forget to leave a like down below. Don't forget to subscribe if you're new to the channel. If you have any questions, leave it in the comments down below, and I will see you in the next one. Bye bye, guys.